pretty much say to zero and the market will just crash. So I think at least when whenever this recessive media or newspapers or even in formal conversations, the impression one gets is that there is so much of selling that it's something unprecedented. Right? But actually it is overbig. If you really look at the numbers, first you look at the very long range numbers and then you look at last years. If you look at, say, for example, the very long range, see a lot of the industry, a lot of statistics in Nifty data, people tend to start it from 1979. The reality is that our markets opened up in 1999. So you should look at all this FI data and all the frameworks from 92 onwards. In 1990, probably 91, 92, India's market cap was 2 lakh crores. When our market cap was 2 lakh crores, obviously FI holding was zero. Because foreigners were not allowed to invest. Right? So at 2 lakh crore market cap, FI holding was zero. Today, we are well over 4 lakh crores now, 400 lakh crores. So 2 lakh crore FI holding is zero, and 400 lakh crores FI holding is north of 17%. So if you actually see the long range history, and by the way, in India, 50% of the market is owned by promoters, and the government has a promoter. So this 17% is actually 17% out of the other 50, which is obviously 30% plus, right? Second important thing is that our problem is not that FIs are selling, our problem is that they already own a significant part of the market. Now coming to the near term, if you see right from 2010 onwards, what you will find is that almost every year there is a high double-digit $1 billion of buying, ranging from, let's say for example, post-Lehman, if you look at 2009, 2010, in a span of over 18-19 months, we were $40 billion in 2019. After that, barring 2 years, practically every year, there is buying ranging from 5 million net positive right up to 20-22 billion net positive. So there has never been a concerted period when it is negative. Coming to this year, even this year, from January to 30th September, it was net positive. And only October and November, it has turned negative. So I think somewhere mid-November when I checked, for the full year, we were -2 or -3 billion. Now it must be 4-5 million or something. So I think too much is made out of it. In reality, in most years, there is significant buyers. In the long range, they have gone down 17% out of the 50% which is on free flow. Right? And in many companies, in fact, there is a very, very high FI holding. So I think it's grown out of proportion. In fact, if you compare, like right now I said that this year there is an outflow. Tiniest of markets like Vietnam and Brazil and Philippines, even they are net negative. And some of them are worse net negative flow than even India. So if you compare us with other emerging markets, you actually conclude that India is the darling of the FIs. Right? And I think there is absolutely nothing in the data to say that they are desperate. It's as simple as this. If you have to send money to US and you find that the rupee is appreciating, you will postpone sending it by 2 days. And if your brother or somebody sending money to you from US to India, if he sees the rupee falling, he'll say, okay, something not really. So I think a lot of it is emerging market turbulence, a lot of it is currency, a lot of it is dollar appreciation, US interest rates. I think these are a variety of short-term phenomena. But if you see long range, there is nothing in the data to say that FIs are not investing.
The Q2 earnings that we saw recently were disappointing, and then we saw just yesterday the GDP number that came, where even senior government officials, including the CA, and the papers said disappointing. Is that a blip according to you, at least as far as the corporate earnings are concerned? Because that's the part that your fund managers will be looking at. Is that a blip according to you, or do you see that suddenly the numbers that are looking so great may continue to be lukewarm going forward in this financial year?
So I think there is no doubt that market performance will always change earnings growth. So to that extent, it would be an understatement to say that numbers are great or something. The numbers have started to taper off. Because if you see the long range, in India, you have to see the earnings growth clearly in three phases. If you see 2002 to 2008, with stellar earnings, so more like 24-25% jump over it. So if you take 2009 to 2020, it was pretty much a disaster because for the entire 12-13-year period, the Nifty earning growth was only 3 to 4% compounded. Right? And that's the time when people used to say that the Asian paints or that finance, HDFC, nothing like so on, etc. And then now after 2020, you'll see like a double-digit 20% plus earnings growth. Now clearly in the last quarter, we have seen a slowing trend. I would put it this way, the numbers are not looking good and they are slowing down is a fact, but there is a couple of points of nuance to this. One nuance you should keep in mind is that we announced, I think elections were announced in March, and through April and May we had elections. Then the government formation and then the budget came in July. And I read recently that for the full year the government's deficit should be 15-16 lakh crores, the revenue minus expense. For the full year, if the deficit should be 15-16 lakh crores, in the first 6 months the deficit was only 28% of the target deficit. If you actually think of the deficit, the way it should move is that in the first 6 months, you should be achieving 60-70% of your deficit target. And then in the second half, the revenue picks up, and then the deficit tapers off, and then you end up somewhere near your target. But this year, the way it is worked out is that in the first 6 months, the deficit is only 30% of what it should be, which means that the government is collecting revenue but probably not spending. And it's not spending because obviously the government for the first 3 to 4 months is either busy or being formed or not in the saddle fully. Second important, so that obviously goes to the economy because the government has been the biggest spender when it comes to capex and projects and things. The second thing to keep in mind when it comes to earnings is also that if you remove commodity, metal and oil, the earnings is actually not that bad. I mean, it's not 20% year on year, but it is about 11-12%. So if you take Nifty aggregate earnings, it looks like there is a degrowth. But then you strip off oil, metal, commodities, you will find that there is a positive 10-11%. Now, of course, if your portfolio is laden of commodities, you are not happy with that. But if your portfolio is such that oil, metal, commodities are input to your portfolio companies or portfolio constituents, then you're not that unhappy about it. Right? Because I think if oil, metal, commodities is going to drive the earning growth, it will show up in the numbers, but qualitatively not that growth. So if you see last quarter earnings growth is not that great, it's true, but I think good amount of degrowth is because of oil and commodity prices. So there is certain some amount of nuance, and I think what the number is printed now is behind us. And now we have to see, like for example, how well the government did on spending. October numbers will probably come down. So we have to see how things are changing, how the deficit number is growing, and how government spending is evolving. The jury is still out on it, but I would guess the worst is behind us. That's what I would think.
While retail investors would be, as you also said, that there's a panic because we did 85,000 and now we're struggling at 80,000. Lots of volatility in the last 15 odd days. But do you believe that's the kind of legal audience still find the levels expensive and would like to probably invest when they kind of come down a little bit more?
So, there is a phrase, when I was a kid, I used to hear this phrase very often on Doordarshan. And yesterday I wrote it also because somebody was asking me, how do you think the market is holding up? So I was telling them, Sthiti Tanav Purna Parintu Niyantran Mein. Because you hear that a lot of times on TV in the past, nowadays they don't speak that kind of Hindi anymore. But I would say that the market is in an awkward kind of balance. It's not that people are panicking, but it's definitely, at a point in time, we're 12-13% down from the peak, which is good. Corrections are always good. So, few days back, we were almost 30%. Nifty was 30% down. If you look at a lot of sectors and stocks, and the darlings like defense and PSU and all, probably 25-30% down from the 52-week high. But what I've seen is that neither people are jumping in saying that okay, these are attractive levels, nor am I seeing that people are really scared or really panicking. The other thing what I would like to highlight is that a lot of people who are following their impression that market has gone up a lot, somewhere I feel they are basing their assumption or they are basing their calculation in the bottom of COVID. See, it's like this, when I was in college, I read this book. Anybody who studied statistics in college has studied from this book on level 2. Okay? I'm not read the whole book, but I read the preface. The preface of that book is on statistics. It says statistics for management. The preface of the book says there are 3 types of people in this world. There are liars, there are damn liars, and there are statisticians.
Is that why you didn't read the book?
Yeah, that's why, I didn't read the book because I never went to college. I was already working. But why did I quote that and tell you the reason? Because I'm not trying to do anything either way. That's why I put that as a disclaimer. But look at it this way, अगर आपको कोई बोलेगा कि भाई पिछले 4.5 साल में इंडेक्स 3 गुना चल गया, तो सही है, because मार्च 2020 में 8700 था, अब थोड़े दिन पहले 24,000 था, 4.5 साल में 3x, it's crazy. There's no debate or doubt about it, right? But look at it this way, that when Nifty went to 8700 or Sensex went to 25,000, what were we pricing? We were pricing case fatality rate of 4.5%. Vaccine will take 10 years. RBI announced a moratorium because most banks will go under. Even will be locked at home for 3 years. These were the thoughts when we went to 8700. So the bottom of the market was pricing the worst case scenario, but did any of the worst case play out? So you need to step back and you need to see that, okay, 6 months before COVID, Nifty was about 11 to 20,000, Sensex was 40,000. 6 months after that COVID fiasco, say by October, November, Nifty was back to 12,000, Sensex was back to 40,000. If you look at Sensex EPS, in September 2020, 1,500, in September 2019, 1,500, in September 2020, 1,600. अगर आपको कोई ब्लैक आउट कर देगा तो आपको पता चलेगा कि हुआ क्यों नहीं. So if you look at 5-year return of Sensex and Nifty, it is 15% compounded. If you look at 4 years, it is 18% compounded. I don't think anybody here has seen a dollar where the Nifty return is 15% compounded for 5 years. And in those 5 years, Nifty and Sensex earnings has also compounded at the same rate. Right? So क्या है कि आप ढूंढने निकलोगे तो मार्केट का कोई ना कोई पार्ट में डबल होगा ही होगा और ढूंढने निकलोगे तो मार्केट का कोई ना कोई पार्ट सस्ता होगा ही होगा. But to generalize the whole market saying it's all up a lot, I feel anybody who says the market is all up a lot, they are कोई गलती कर रहे हैं. या तो कोविड के ऑर्डर से देख रहे हैं, या तो सोचा था उससे कहीं ज्यादा रिटर्न मिल गए. तो but I think market is fair. I mean, it's for stock pickers. It's not on either side exaggerated.
One final question, Ashish. What are your preferred sectors? What are your fund managers right now focusing on? Because again, when you invest keeping in mind the future performance of those sectors. So 2 or 3 sectors that you like. There's a lot of good movement still awaiting us.
Yes, because it's a mutual fund summit, and there is, I would say, mutual fund managers and mutual fund investors who are in the audience. So I just want to share one piece of statistic. See, if you take BSE 500 data, and I'll come to the sectors because the message is very what I'm saying. If you take BSE 500, and you take a split of BSE 500 and say the top 100 which is large cap, the next 150 which is mid cap, and then the 250 which is small cap. So you take the market cap of BSE 500 and you break it that what proportion of BSE 500 market cap should be large cap, what proportion is mid cap, what proportion is small cap. अब पिछले 10-15 साल का हिस्ट्री लेंगे ना तो आपको मिलेगा कि at the highest point large cap has been 77% as a proportion of BSE 500. Today, large cap is 61% as a proportion of BSE 500. If you take the history, the average is that large cap is 70% of BSE 500 and small cap mid cap as a proportion is 30%. Today it is 40%, average is 30%, least is 20%. Now, this is the lay of the land. That BSE 500 का क्या composition है? तो अगर आप सोच रहे हो कि कोई neutral way investor है, aggressive भी नहीं है, defensive भी नहीं है, जैसा market है वैसा लगाना चाहता है, तो आप जाहिर सी बात है इसके portfolio में 65-70% लाके होना चाहिए, थोड़ा neutral weight है. Aggressive guy can be 50% small and mid, and a defensive guy may be fully large cap. तो but You will keep the averages in mind. Do you know that in the last 12 months, Indian investors have put roughly 3.5 lakh crore rupiah net into my outflow? 3.5 lakh crore rupiah net has gone into equity mutual funds. I'm not even talking balance account. Pure equity, no index fund, no ETF, just equity mutual funds actually be managed. 3.5 लाख करोड़ रुपए है। अब जो मैंने आपको मार्केट कैप का स्प्लिट बताया, बेस्ड ऑन दैट आपका क्या गेस है, हाउ मच ऑफ दैट शुड बी इन मार्केट? अगर 3.5 लाख करोड़ रुपए म्यूचुअल फंड में लगा है, एंड औसतन अगर म्यूचुअल फंड्स का जो बीएसई फंड का स्प्लिट है उसमें ऑन एन एवरेज अगर लास्ट ईयर 65-70% है, तो जो 3.5 लाख करोड़ लगाया गया है उसमें से कितना पैसा लास्ट ईयर में जाना चाहिए? Anybody has a guess? It's 4%. What is actually deployed in large cap is 4%. If you argue that the larger mid cap का आधा large cap होता है, flexi cap का 60% होता है, वो सब कुल मिला लो, what you find is that 18 to 19% of the money has gone into large cap. Bulk of the money has gone into small cap, mid cap, and 40% of the money has gone into thematic funds. And those thematic funds are not banking, IT, pharma, or consumer. Banking, IT, pharma, consumer is also 60% of the market. But where is the money gone? Defense, infrastructure, energy, commodities, PSUs. So what is happening is that people's portfolios are way out of the playground. So today people need to rebalance and bring the portfolio back in the center. We need to move back to large cap. We need to move back to banking, pharma, IT, consumer. You know, Calcutta people love soccer. 90-minute soccer game. Tell me, out of 90 minutes, 75 minutes, where is the soccer ball in the playfield? I'm not talking Argentina versus Nepal. I'm talking Brazil versus Argentina match. If it's a 90-minute soccer match, for 75 to 80 minutes, where are you likely to find the ball in the playfield? In the middle. That's why they have ball possession. Have you ever seen a soccer match where for 75 or 90 minutes, the ball is in somebody's penalty area? So 75 minutes ball penalty area में रखेगा तो सामने वाला आपको गोल मारने जाएगा. Right now, most people's portfolios are somewhere in the penalty area of the market. It needs to come back in the center. That's the
people also love cricket. What's your cricket analogy?
Test match.
We are ready in Eden Gardens. Play a test match. All right. Thank you. Thank you very much, Ashish. I know it's been a short conversation, but very, very rich as always. Thank you.
Appreciation, Memento, and Associates. May I now have the privilege to invite our next guest speaker onto the dais, Mr. Deepak Agrawal, CIO of Fixed Income and Head of Products from Kotak Mahindra Asset Management Company Limited, for the CEO movement, investing in Exit Bharat virtual well-providing conversation with Mr. Vivek Rao, editor-in-chief and co-founder of Supertech. Thank you, sir. Welcome you on the dais, please. I request Mr. Rao to take it over. Thank you.
Get ready for. John the mic. Get ready for ABC Rapid Fire 2. Ladies and gentlemen, we focused a lot on equity through the morning, but I think in all of the data that was presented, it was always equity. But I have with me now someone who's the the CIO at Forsyth's position as someone who's very closely tracked the debt markets. And actually, if you see, while we prefer to talk about equity when it comes to mutual funds, and I've always been saying this, I think it's very wrong that we view mutual funds as only equity. I wish that there were more conversations also around debt. Because you heard asset allocation, you heard the right way to invest. But when we talk, we only talk about equity. Debt is an equally important part of anybody's portfolio. And Deepak and his team actually manage a large part of that. He is the CIO fixed income at Kotak Mutual Fund, and somebody with a vast experience in this profile of that. Thanks very much, Deepak, for coming to Kotak. Are you also from?
No, my brother is not.
That's even better than that. I hope they're here watching.
No.
I think you're back. You didn't. Oh, yeah, no. Oh. Did you plan that? I don't Sorry. My first question to you. Last year or this year, when the budget, put FDs and debt mutual funds pretty much on a tax advantage point at par, there were a lot of concerns. At least certainly people who are in the higher tax bracket, does it make even sense for them now to go to a product where there is no fixed return vis-a-vis an FD. So how have things played out post-July in that scenario?
So Vivek, this change happened in 2023, not in 2024.
No apologies.
So starting 1st April 2023, there is no indexation benefit in a debt mutual fund scheme. But even before that, if you look at the total AUM, two-thirds or close to 70% of the AUM were in schemes where the investor did not stay for 3 years. Only if you completed 3 years, you got the indexation benefit. So debt mutual fund schemes were preferred not only for the tax benefit, but because of the other advantages which let's say debt mutual fund has. Now, what does a debt mutual fund actually do? It is actually doing a lending business, which banks can do. We invest in securities. When we are investing in securities, in turn we are lending money. Because our OPEX is relatively lower, we are able to offer better returns as compared to other traditional fixed income options. So because and let's say today, from let's say the last 2 years, RBI has been raising rates, liquidity in the system is tight, and therefore total bank equity rates or other traditional fixed income options, the rate will be similar to let's say mutual fund portfolio. This is not going to last longer. As and when rates come down, there will be a gap between mutual fund portfolio rates and bank equity rates. And investors will still continue to prefer debt fixed income option, which are let's say other traditional fixed income options. Plus, let's say even today investors are doing SIP investments, they are parking their money in exchange, and from there they are doing a systematic transfer. Again, let's say just to do a comparison, if you look at the yield curve in fixed deposit, the yield curve is inverted. You may get a higher rate for a short-term period, but if you are looking to invest for 5 years, 10 years, the rates are typically lower. That's not the case with a debt product. Second, let's say in a debt mutual fund scheme, there are no exit roads in place. Whereas in an FD, you may have some liquidity cost. And at the same time, let's say one important aspect of debt mutual fund scheme is that you pay tax only when you redeem your funds. And because of this, the total return to an investor is relatively higher as compared to other traditional fixed income options. So, yes, tax changes have now got debt mutual funds as parity with, let's say, fixed deposit. But these schemes have merits. And these schemes will continue to grow over a period of time. Near term, because of high liquidity, growth rate has come down, but it is likely to grow over a period of time. Total deposit in the banking system is close to 210 lakh crore. Debt mutual funds are close to 15-16 lakh crore. debt mutual funds will also grow and probably reduce the gap between bank FD rates to bank deposit size and the debt mutual fund size.
Do you see credit risk funds coming back? I mean, they were fairly popular because, that you were then actually lending to other entities. But then there were a few accidents and, suddenly it emerged as if this whole category doesn't need to exist. Do you see that coming back, at least especially for smart investors?
So one is all these accidents happened prior to COVID period. And accidents do not happen uniformly, let's say across all mutual funds, accidents happen beyond mutual funds. Now, what is, let's say, post-COVID, what we have seen the financial most of the corporates have improved significantly, and they have also paid down their debt. And since then, we have not seen significant increase in demand for credit, and therefore the supply of credit papers is relatively muted, and the credit spreads are also low. Now, it's a general cycle over time, let's say, as and when credit, let's say, demand increases, supply might increase, and the credit spreads may also be affected. Plus, equity markets have been doing good, so investors are choosing equity allocation over, let's say, credit. And probably your first question, the total debt allocation is also probably relatively low because equity market is doing good and the outlook is also good. So credit also, it will play out in cycles. We believe that the credit spreads may whatever over time and investors will come back into credit funds. Plus, let's say, over the last 3-4 years, investors who wanted to take credit risk have also looked at performing credit AIs. These are closed-ended funds. These funds are generally taking relatively higher credit risk. They have the ability to structure deals because, let's say, as mutual funds, we have now regulations in place that I can't go for funding or lending against shares unless I have a holding asset. So that reduces the ability to do such trades in a mutual fund, but whereas performance rate has that flexibility. So some those of the credit strategies have also moved from mutual funds to, let's say, performance rate.
You also recently, launched something called income plus arbitrage. So, there is innovation going on even on the debt side. We hear about arbitrage funds, where there is, I'm assuming, fund managers moving money between equity and debt as well. What other kind of innovation, like the one you just launched, also, and I'm sure the other members of the industry will also launch. Do you see these giving? The reason I'm asking you this is when we talk Viksit Bharat, and especially people in small towns and cities cannot see it. So they need to first probably move to something which is closer to a, less risk products like a debt mutual fund versus just jumping straight into equity, complete equity products. So are these schemes going to be able to further enhance returns vis-a-vis a traditional bank product?
So let's say innovation, I think, is a continuous journey. So let's say prior to the taxation change, in the calendar year 22-23, mutual funds came out with the private maturity funds. And private maturity funds received good amount of flows in the calendar year 2022-23, in spite of RBI increase. Subsequent to that, we have also carried out an innovation where in the private maturity space, recently, SEBI had allowed us to come out with sectoral private maturity funds. So we were the first in the country to come out with the financial services in AAA index. Because the entire portfolio is invested in AAA NBFCs, HFCs, the portfolio is relatively higher as compared to any other scheme. Third, continue to be innovation and in order to give investors options to have better tax efficient returns. We have come out with this total income plus arbitrage scheme. Now, if you look at the taxation part, any schemes which invest more than 65% in equity, an investor at the end of 1 year is eligible for long-term capital gain tax and pays to an portion. Any investor in a debt scheme, what is a debt scheme? When the interest-bearing instruments are more than 65%, that is a debt scheme. Then the investor is taxed as per the salary. But what happens to a scheme which is neither an equity scheme or a debt scheme? where the debt and equity allocation is less than 65%. In that particular scheme, at the end of 2 years, the customer ends up being 12%. So this quota income plus arbitrage scheme is going to ensure that the debt or equity component is not more than 65%. We invest 40% of the portfolio in arbitrage, and the balance, let's say, 60% in debt, and an investor at the end of 2 years has to only end up paying 12.5%. So this is a good proposition for investors. I think this is a much better tax efficient option over, let's say, debt fund for investors looking to park their money.
One final question, Deepak. Where do you see interest rates going from here? Because especially after the print we've seen coming out yesterday, earlier the concern was, or even a little before that, RBI's concern was inflation. So inflation is the last print is about 6%. And at the end of the day, there was a hope that the growth will now, of course, the previous speaker mentioned that that's more like a blip. So given this, what is the market signaling in terms of interest rates for the next, say, 6 months, 12 months, and therefore the kind of returns that you are considering?
So you are right, Vivek. Again, see, after 2 years, Fed has finally started cutting rates. Fed has already cut 75 basis points. And based on Fed reports, they have indicated that they will cut 125 basis points more. But we think probably that may be scaled down to, let's say, 75, 100 in the December policy, so the data from the US is strong. And probably the policy action which Trump government is likely to take may be inflationary in nature. So probably needs to see. So one point is there that US is still continuing to cut rates and is likely to cut rates by additional 75 points. Coming back to India, yes, yesterday the GDP data changes a lot of things. Inflation numbers have been rising. For last 2 months, inflation numbers have been happening, let's say 5%, in the last month inflation reached was close to 620. But largely the spike in inflation was due to tomato prices. Now tomato prices are cooled down, so onion prices have started moving up. So it's quite likely that for the October to December quarter, inflation is closer to 5%. But if you look at inflation, excluding credits, it is sub 4%. Your core inflation for entire year has been trading in the kind of 350 to 370. Till now, let's say the expectation for the second quarter GDP could be anywhere between 630 to 690. But yesterday number was a little bit negative, it was a shocker, I think. And we believe that finally monetary policy should not be decided by current inflation but by forward-looking inflation. And for FY26 right now, and this is higher inflation will result in lower inflation next year. Right now, market estimate is that FY26 headline inflation is actually to be around 4%. Reported at 6.5%, that's a real rate of close to 2.5%. So there's scope for RBI to cut rates. Yesterday's number, yes, RBI may try to believe that growth may become in the second half, but I think after looking at 540 number, they will also get little, they will be into points. And even let's say, in the second half growth, let's say if it's at 7%, the full year growth will have close to 6.6%. So our belief is, earlier, because of the higher inflation number, the expectation was the first cut to have magnitude, but we think that next we won't. And we have an RBI policy next week. We believe that RBI, a high chance that RBI is likely to cut rates by 25 basis points. Over the next 1 year, if growth does not pick up, our earlier estimate was that RBI is not getting more than 15. But if growth does not pick up, and even in FY26, the growth is closer to 6 quarters, then probably in this cycle we may have close to 75 basis points. Along with that, because of FX outflow, over the last 2 months, liquidity has brought back in the banking system. Now, once you have changed your stance to neutral and you are cutting rates, you also need to ensure that there is enough liquidity in the system. And therefore, there is a good likelihood that there is also a scare cut, either in this policy or in the policy after that. So, RBI has a dual mandate. Inflation, forward-looking inflation is lower. Growth, as growth concerns, should now basically have caught up. And therefore, RBI needs to act. Let's say next week we either have a cut, see a rate cut, along with the CRR cut, or either one. And therefore, we have been advising investors to increase duration of their fixed income portfolio. and they should continue to do so.
Thank you very much, Deepak, for coming from Mumbai for this session. And I know it's been short, so much you brought to us. Sorry, sir, there's no time for questions.
Thank you.
We'll ask you later. Thank you so much, and thank you, audience. Please give them a big hand. Concise, clear, very important points. I would really like to thank Mr. Sen for inviting me. It's been great to hear Mr. Krishnan, a very old friend, mentor actually, been interviewing him for many, many years. Sangeeta Banerjee, thank you very much for getting me here to my hometown, and thank you very much, audience, for being such a wonderful patient audience. Thank you.
Thank you, sir, for concluding this wonderful session. And before we really conclude, I will request Mr. Lord to felicitate Mr. Deepak Agrawalji with the program of Institution Management Certificate, please.
Request Mr. Arvind Singh to kindly felicitate Mr. Vivek. Thank you. We have a very interesting session coming up before the last session before lunch. It's a moment session, and we do the changeover very fast. And we request to be patient because the session will be really interesting.
We move to a very exciting session, which is a C2 session driving wealth management penetration for women. Keeping in mind the agenda, which is Visit for 24/7, women happens to be a very important pillar, and we cannot ignore that. To drive this session, may I now request our esteemed speakers on the dais, please. Ms. Priti Amres, Fund Manager Equity from UTI Limited, on the dais, please. Ms. Arupati Shahasana, Executive Director, Relationship Management from Waterfall Financial and Investment Advisors Private Limited, on the dais, please. I would also like to invite CA Vinita Kejriwal, Founder and CEO of Vincent Financial Services Private Limited, on the dais, please. We are glad to have the session chair, Ms. Neha Bhagat, Associate Partner, Price Waterhouse and Company Limited. Company LLP, on the dais, please. I will now request Ms. Bhagat to take it from here. Over to you, ma'am. Thank you. Hello. Check, is it okay now? So I know that this is the last session before lunch, and first was going to be a very interesting session. I think so far, I have been in this room since morning, and I have only been hearing all day talk about finance and investments. And I think it's important that I think as women, we also play a significant role in this. And therefore, I think what the panelists that we have here are people who are part of the ecosystem, right? And therefore, it's very important to even hear our perspective for a change, right? So, very quickly, I can just introduce each one of us. So, yeah, I'm Sneha, and I'm partner in tax practice at PwC. Having advising clients on tax and regulatory matters, including new setup in GIFT City, which is a new initiative by our Prime Minister, right? I have with me today Arundhati, who is from the advisory side. She's from Waterfield Advisors and has been advising HNI clients. On the other side, I have with me Vinita, who's from the distribution side, right? And she is a certified financial planner, and she will be giving her perspective. And then we have Preeti, who is on the extreme side. She's on the mutual fund side. She's a fund manager. And I need to begin with Vinita, I will request Preeti to actually make a short presentation, and then from there we can do a panel discussion. Over to you, Preeti.
Thank you, Sneha, for that introduction. And special thanks to ICC to include this segment on women in investments. I think it would be incomplete to bother on that to inclusively and well-being without bringing women into the equation. So this is a little, I have a very concise and impactful presentation that talks about women's journey in investment world. And also it highlights the current state, the challenges, and the way forward. So it's a common place that you see Indian households are home to the largest gold reserves in the world. In fact, we have around 27,000 tons of gold in Indian homes, which is almost 3x of what US Fed has. So, but good part of this credit, the good part of the credit for this decision goes to women. While one part of the decision was because of the attraction of gold as jewelry, but it very soon, over generations, they have understood the value of gold as a compounder as well. So even without realizing, so if you as you can see on the slide, gold is compounded at 30%, only next best to equities, which is at 16% over the last 20 years. So women have been doing it without their own knowledge, and now we look at in terms of equity participation, that is absolutely low. So women account for only 21% of mutual fund investors. This is the data that we have from AMFI. And even when we see the incoming mutual fund investors, especially the millennials in the last 5 years, only 26% of them are women. So clearly there is underrepresentation of women in the MF fund investment world. So if you see what factors actually influence participation, so if you go back to those key fundamental reasons, the question is, are women educated enough? Are they working and earning their own income? And are they financially literate to make their investment decisions? So if you ask about the first question, if you look at the stats, the literacy rate for women on the right side as of 2017 is 70%. So on paper it looks good that it's a decent financial literacy rate, overall literacy rate. But the quality of education and the level of education, whether it's secondary and tertiary, it also plays a very important role in this. But when we see in terms of their participation in the workforce, the line below, which is at 37% in 2023, the women participation stats very low compared to the male participation in the workforce. So 70% are literate, but only 27% are in the workforce, and that could be a skilled labor. So I think this is a significant gap which needs to be addressed, and there are many societal and cultural reasons why this gap is so high. But there is a silver lining to this. When we talk about one of the main reasons why women are not so active, even in workforce for their investment decision making, is because of the caregiving roles that women have to take up as for kids or for elderly. So this is called the dependency ratio of the workforce population. So this in 1970 was as high as 80% for India. So today we are hitting a tipping point at 45%. So we have seen this play out for China as well, which is also similar levels. Play out beautifully in terms of the demographic dividend as well, which kick-started this whole double income society structure. So I think this is the hope that I would want to leave the audience with. This is going to help and kickstart this double income society structure in the country, which can in turn propel the national economy for women. So, once a woman is educated and she's in the workforce and she's making her own money, yet they are not taking their investment, they are not making their own investment decisions for the future. Or if they are making probably some of their own decisions. So there are myths hindering, this women's participation, both in women's minds and also in the society. Things like, wealth management is probably left only for the rich, or it's probably left to the men in the house, the financial planning. Or they think that women are more risk averse than what men are, or they prefer gold or physical assets like real estate, or they prefer equities and tax financial knowledge. And this is exactly what we want to address. It is true that all the typical wealth management models are catering to the rich, the HNIs, ultra HNIs. So that's the wealth management one model. So and now I'm talking about wealth management three. With technology as an enabler, we can actually bring in those models where there is human touch and there is technology, where we can have personalized models for customers down the wealth curve as well. And here, I think this is our emphasis that the wealth management institutions, the financial institutions, distributors, planners, they have to focus women as a special category of investors and focus on building this financial literacy awareness, build these communities for women to bring them into the world of investments. I think that's pretty much what I want to say, and we can cover some of this in detail in our panel session. Thank you so much. Thanks. That was very interesting session. Thanks, Vicky. That was a very interesting session. Just presented. I think we will stop like financial document before talk about financial impact. So, how do you think how important is financial ability for women? I think this goes back to the question of fair representation of women in the society. So if you take the population of the country, nearly 50% of it is women, or 49% to be precise. But if you see women representation in anything in the world, in anything in the country, is much, much lower than that. For example, even in Parliament, the women representation is just 14%, and there is an effort to take it up to 33% by design. Right. So it's just, and it goes back to the conversation of women empowerment and gender equality in the truest sense. Because only when women have their financial autonomy, they can make decisions for themselves and also secure their future with such investment decisions. And still, even when you talk about mutual fund as a sector or even asset management as a sector, I think there are I think today the ratio is probably less than 10%. Sangeeta, we were expecting more women in the audience. I think we have Vanita who has been looking at financial planning as probably the first point of contact when it comes to somebody who is new to handling money, right? And I think here in this room everyone will agree that women are good at managing household finances and they do a really good job. So then why not really even hand over the responsibility of financial investments, right? So with that, Vinita, I would really want to know, like, when you deal with people, right, and when this is something that you recently take care of, what is your point of view on this, or probably, how do we redefine this narrative?
Good afternoon, everyone. And actually, like you said, as the IDP, we can see only handful of women sitting here. And that has been my journey as well, because when I came to the clients, so it's hardly women who comes and take the financial decisions. So when you talk about this, I think, women actually plays a very pivotal role in budgeting. And the study says that 75 to 80% of daily financial decisions, and in cases you can say 100%, and all the men sitting there would agree to it. 800% of the daily this kind of decisions is being taken by women. But when it comes to taking financial decisions, they actually take a seat back. And this proportion is actually seen in the mutual fund industry as well, because it is a mutual fund summit, so I want to share some data. When you see the women investor, it's only hardly 30 to 35%, and that too, if you say 14 to 80% of the women take the financial decisions in independent capacity. So I mean, that's actually the number and that's the disproportion. And as a women community, we should come forward and change this narrative. And what are the changes we can bring is shift in the mindset. The women should be educated that investing and saving is not the same thing. At times, women forget that they have this natural, instinct. They should use this as an extension for managing their money. They forget this way. हम भूल जाते हैं हमारे लिए budgeting का skill inherent है. So you should use to manage your financial planning as well. And I think more and more financial literacy programs, workshops should be designed so that women can come forward, because most of the time it is about lack of confidence, and that is also because limited kind of knowledge which they have. So they take a seat back or they become a little skeptical how to take these decisions. So if you have more and more such programs, such workshops, and I know most of the bodies are helping in this because there are regulators who are coming forward and they are helping and curating such kind of programs where women are coming forward and taking their financial achievement to the next level. And thanks to this digital platforms and this fintech, where you have such kind of platform which is actually designed for women. So there also because women need that comfort as well. They don't want to open up very quickly. उनको ये लगता है कि हम कैसे संभाल करेंगे. Because for them this is like a new arena or a new kind of thing which they are going to take ahead. So we can also form some kind of community where we can come forward, we can share our ideas, and women actually become an advocate or anchor for other women if they know something about this. And I've just recently launched one community which is called Dinesh Saki. This is going to be live in period day or two. So I wanted to share which I have because maybe I feel this is my universal responsibility. अगर हमें कुछ करना है, let's come together and give back to the society. So I think this kind of shift or the change can actually take a women to the next level of their financial planning.
Want to this. So we all are Indians and we have to brought up a particular way, right? So is there something in the way we have been brought up and where probably the men of boys of the family, vis-a-vis the girls are treated probably differently? I think in each household probably when we talk about money and finances, I think generally the way the discussion should be that probably the males understand this better. So is there something to do with the culture or the way we've been brought up?
So very good question you have come up with because I also come from a very modest, Marwari kind of community where it was used to say before 20-25 years back, अगर पढ़ाई होगी है, graduation हो गया है तो go and get married. That was the norm of the narrative. But I think we have been evolved. Changes are happening, transformation is happening, and transition we are seeing. So I think this culture shift is really very much important. Most of the time, women have been positioned as more of caretaker of financial things. We have not been perceived like a wealth creator. हमें हमेशा caretaker ही देखा गया है. But this change should come within ourselves. We should come ahead and we should more be like a serious inclusion part. So ये हमको कुछ changes लेके आ रहा है. So how can this be, this can be portrayed? So first, I think most of the time when you talk to a women, like about any finance, this will be referred to your main family member. So I'm okay with all your yarn and everything, but I have a maybe husband, brother, father, whoever is there, they will take these financial decisions. So I think women should be made accountable. They should take this ownership. Most of the time, what we think, paisa like I don't want to play with that. I don't want to, touch this. मुझे ये मेरे भी नहीं जाना है. Let me make them take this decision. But I think these changes now we can evolve. So these changes are really very important, and also one very important thing. As a society or a cultural thing, we have been conditioned like हम ऐसा ही condition हमको दिया गया है कि we cannot take risk. Because when we see our mother, great grandmothers, grandmothers, we are seeing they don't take risk. Even if you see your mother, not to go so much generations back, even they have been investing in any kind of fixed deposit, they will not take the risk, they are very risk averse. They don't want to get into equities, mutual funds, any such kind of product. I think we need to understand that risk appetite will have to be very relevant. Because when you talk about your lifestyle or changes, you are so apt, you know what is the fashion and trend. But when you talk about investments, you become little old fashioned. So I think these changes are important. And this can be done when, families should come forward and encourage your women members to take such an financial decision. If your daughter or wife, they should sit with you when you're planning anything related to your finance.
I think she just talked about family and women participation in the family. So with that, I think I would really want to go to Arundhati, and who has been really working on the family office setup. And probably she has been dealing with HNI, UHNI clients, right? And where probably wealth is available, right? The crowd is also has a necessary, I would say, they're financially literate, they're well educated, right? So, I mean, I think it's probably the problem of plenty, that you have everything, and then how do you really manage that particular wealth, right? So, probably I don't think we just want to share a few instances of Indian families where they have wealth, and how are they really looking at women participating in financial investment or decisions in that sense, right? Over to you.
Hello everyone. In UHNI, HNI families also, it's not different from other middle class or upper middle class Indian families. There also the participation of women in the financial decision making is very less. And it is more less because the lady of the house has disposable cash whenever she wants to spend. She doesn't need to think. And that is the reason why she never thought of increasing the wealth or saving the wealth of something. So in Indian families, now things are changing. The main thing that we have taken initiative or we have to take initiative is that the male member has to make the female member interested in taking the decision. We need to make the female member a part of their decision making. Otherwise, what happens is that when they inherit wealth from, if something happens to the male member and the female member inherits wealth, then she is clueless. She doesn't know how to actually, she has inherited so much, but how to save that, how to grow that. Like there was an interview of Rekha Jhunjhunwala when she inherited $10 billion from Rakesh Jhunjhunwala. And she said that whenever Rakesh used to speak about investment at home, I never paid attention, and I regret that. If I could have done that, then maybe I could have better managed those funds, and I could have done better job. So it is before any incident is happening. Before that, you should take the step. Financial literacy is a must for every woman, and then you should start investing. If you are not confident, at least start investing little by little, so that in future, in some time, you will start understanding things. And if a female member is a housewife, yes, she has more time, so she can also indulge into educating herself with more knowledge and everything, reading more content and different newspapers, financial matters and everything, and they have to come up. Yeah, thank you. I think you really brought up important points. I think financial literacy, like the kind of title that you handle, I think financial literacy is there. It's probably that we're not really tried or hands-on. We don't have the hands-on experience to invest. So probably even when we talk about the way in our communities, I think it's very important to allow women to at least try and get involved in financial matters. So in fact, this is what I also hear is that wealth managers, when you have these relationship managers making home visits, they try and engage the women members, also the family as well, right? So that it's more inclusive kind of an environment, and even women are involved in the decision making.
Like in photography, we have started this thing on heritage where we actually enrolling the female member of the family and we are asking the male member of the family to actually transfer a portion of the portfolio to the female member and then we have cumulative curriculum so that he can go through the wealth management literacy program, it's a full program that we create, and then they should have gone through the main thing is that taxation, risk management, succession planning, everything is actually be part knowledge with them.
Sounds interesting. I think that's probably the way to go when we really start taking actual steps to see how the women can be empowered to manage their wealth, right? So I think maybe on typically on the wealth management products or where typically one needs to invest, right? When we talk about wealth, I think the first thing that comes to my mind is gold. They probably have something to do with real estate, and I think now financial instruments, right, which is equity shares, mutual funds, and all. And I think we have Preeti who was there, here we are talking about women making investments, and Preeti is in charge of actually, she's on the mutual fund side and she's making those investments from the manufacturer perspective, right? So Preeti, just wanted to share about your experience in this industry and how easy it is for women to really work in this industry, and we'll probably share your experience here.
Yes, sure. Sneha, it is no secret that it's a male-dominated industry, the fund management industry. So when there was a recent report that the share of women in the women fund managers in the industry is around 8.5%. That numbers are 42 fund managers, women fund managers to be precise. So it's still a very long way to go. And just a brief about my background, I joined India Mutual Fund as a research analyst, and I have grown in the system, and I'm now managing a fund. So I think that's been the growth trajectory. And if you ask me if I can do it, anybody with basic education and having the right tools and right access to right information, somebody sitting at home will also be able to do it. It is not really rocket science for sure, because whenever I'm trying to explain to someone that the way it's also said, if they can understand fashion trends, if they can understand how we use Instagram, and also figure out the social media power and financial decisions, like men, you don't have to go really deep. I think the aspects that you need to understand is you need to sit for the future to asset allocation. So you have to be well diversified in terms of asset classes. So historically, you were highly invested in gold, so you have to diversify that into, let's say, mutual funds like the equity or debt, and also real estate. So you need to have everything, but in the right proportions. And that's the message that we need to tell them and understand the very broad principles of this investment. Like once you do equities and as you take more interest over a period of time, you'll get the hang of it. So by staying back, by taking a back seat and leaving it to someone else, it would be very impossible to achieve the dreams that we have in terms of penetration that we want, especially in terms of the investments. I think like what Arun also said. So we need to start that conversation today so that we are much ahead, let's say maybe in 2 decades from now.
Thank you. Sangeeta, I just wanted to keep a check on the time because it's like going closer to lunch. Or maybe I can just have a few quick questions. Okay. So maybe just any questions from the audience, or maybe I can just go quick round of questions. So it's a man asking a question, so I'm happy about it.
So this shows the concerns of men regarding women, I would say. We have been very intricately hearing. So whatever you people are considering is really nice to hear. That if there are few women in the ground in India who want to help the other women. I think it's just a blessing in disguise for all of us. So my question is that, for example, for my wife only, as she just said, I've been deeply involved in the market for the last 30 years, and I really used to follow her. This came in the newspaper a few days back regarding the economy. So, this is a question which is, I think, in every investor's mind, because the housewives are not very keen on learning. So, as what I've understood from this conversation, everyone is launching something called Image Saki, which is a new, which I've noted down. So, how, after the seminar, how can we connect so that, our wives, sisters, daughters, maybe, can get attached to this woman forum? Because I think all of you are doing something very special, but we would like to get attached to it for our female people in our lives.
So like you said, I spoke about the community as well, and I've been in this industry now almost 20 years. So even I also do a lot of women financial literacy programs specifically, workshops, seminars. So maybe you can get connected to us and I can share my knowledge so that I can help maybe your wife or someone else who wants to actually want to have such kind of knowledge of such sections. I keep on running an active capital itself.
I think just to add to what Vinita said, I think it's very important that you give the women of the house the hands-on experience, right? So if they won't start investing and they won't start experimenting, it's not going to really happen. So I think that's.
So I also wanted to add, it's most of the time it's only we are talking or we are planning and understanding, but it's very important to have to get into execution mode. So that is the lag which happens, like they can understand, but when it comes into execution, they need to start. They need some navigator or some kind of handholding for this.
Yeah.
Can I say something? Well, I think Indian men are among the worst investors. If that was not the case, you would not have 210 lakh loan and fixed deposits, which don't take inflation. So I think we Indian men have to pat ourselves on the back and say we know it all, and the women don't know it. If you see the FNO and the trading and the fact that 93% of them make a loss, and they never tell anyone that they made a loss. They will meet in the evening and only talk about the gains that they made. But the fact that now we have actual data from SEBI, and I think there is enough data to also perhaps find out how many of these day traders are men versus women. I'm so happy that this panel is there. I wish that the first panel had women on it as well. And I do wish that among the two people I interviewed, one was a woman at least. But I just want to leave the point that please don't try and replicate what Indian men are. I mean, as you all are, you have to have your own journey. To say that Indian men have done a fantastic job of investing, I think is a very big line. So keep going and carve out your own path. Don't try and copy what the men in your family have done.
Great, that's very good message, I think, really. So that's a very valid point. I think your life is quite relative. The point that you made on deposits, I think 60% from our deposits,
60% of financial household savings were in deposits, which is actually gone to 50% now. So that means more money has gone into markets, be it equities, and mutual funds, or in stock market. So there is a shift happening. I mean, I think the focus here is that we should have special programs for women. Anyway, there are many programs happening for men. Right? So if you see all the mutual fund distributors and you go to any town, there are networks, agencies having these programs. There is, they also need to be financially literate. They are also not there. But women are far less behind. I think that's what we're trying to address. But very valid point that only 10% of our household savings today can increase. So it's not a great asset allocation by men as well. So let's say if we bring women, I'm sure they'll be able to skew this number much faster than what men would have otherwise. And that's a hope.
অতটা সুদিন স্যার রেজিস্ট্রেশন করবে না ও তো ইয়ে করছে পিডব্লিউজি করছে আর সেখানটা থেকে সুদিন স্যার করবে
Yes, I could see the point was raised between the pressure of ladies and maids. Don't you think that ladies are playing the lead role themselves? And I see a positive sign in you, right, that they're doing it. So I don't think we should be very concerned about it because the ladies are conscious and they're coming up.
I would say that obviously ladies has to take the lead, and that is the main concern because if see professionals like us also, it is the problem with us is that we earn money and then the investment decisions we leave it on our husband.
Okay.
It is not a problem for only the people who are housewife or something. So that I agree, sir. Not always, but most of the in our industry, that what we have seen is that the clients we meet and all, the lady is earning a lot everything. If it is everything, she will do it herself. But if it is an investment related equities or any other investment, then her husband is the main decision maker. So we have to change that pattern, and the female member has to start, what you have correctly said, they have to start taking initiative. That, sorry sir?
Right?
Sir, and
She gives the liberty to woman, give the guidelines.
So I think, sir, I agree with what you just mentioned, but I think the change in the mindset or the cultural shift is something that each one of us have to really work over, and that's how we will get where we really want to get, right? I think we can just probably conclude the session. Thank you, speakers. Sorry, there was a question. Okay.
Investment happen, correct? So lots of women in corporate or housewife also, they are not aware, they generally know the normal, everyone normal things. So can they access any website or anywhere? Those knowledge can be imparted to them. Because for everyone join the workforce is not easy. You might not be aware of this.
Yeah, I think the first step should be to interact with the financial advisors. So there are around 1.5 lakh mutual fund distributors in the country who are doing a great job to bring investors into the world of equities. I think it goes unrecognized, but they're doing a great job, and they should be the first port forward to even understand, because they will guide you right in terms of how to go about investment, especially in equities. But in terms of one, I think it's difficult to say one website, but on YouTube or even something like what Zero has been doing, there's something called Watch where you can actually learn a lot about the investments, equities, the products and instruments that there are. And of course, even AMCs, like on their own, they have their own, FAQ questions or presentations which are highly simplified for a new investor to understand. But I think the first person should be the advisors to go to start your journey.
I would like to add something. There is no dearth of information. I mean, information is there and it's lying. But like you said, you have a lot of things that maybe it's a YouTube, social media, but you need to filter it out. And it really becomes difficult when you're starting your journey. That's the first step only when if you don't know where to go, how to go, you need an educator or a guide kind of thing. Because otherwise websites, so there are many multiple. But how to start, which is the trusted one, is it the right? So now there you need a proper advisor who can actually guide you through all these.
One website which comes to my mind is Value Research. They have a phenomenal, set of presentations, information, especially for mutual funds to understand. I think that would be good place to begin with. ValueResearch.in.
Investment. The way in one of the speaker told about the minus amount or something, but we are not aware of those kind of investments.
On the contrary, I do not want to say that we need to have women-centric products. We need to have women-centric programs so that we have this entire hall of these women who are here to learn and engage with each other, build that community to understand investments. The products are the same, the equities of women within equities. They just need to understand and do a better job than what the counterparts are doing.
We are not talking about any exclusive things. We are talking about inclusion. And for that inclusion, we don't need any exclusive products. So when we because the product will be only, but we need the right knowledge. There only comes the confidence. So for that, I mean, you can go through these sites or maybe then you can contact your advisor if you have any points, otherwise there are multiple. Thank you.
But do we have a, kind of a trend that in India, there is a statewide breakup, how it is showing up, that in which part of the country, how women are taking decisions, right? All around, it cannot be equal or the aggregate cannot be the same. So, is any trend coming up really from that side?
So if you see all India average, the women, the share of women investors in the assets under management of mutual funds is 21%, but it varies substantially. In Goa it is 40%, and in Northeast it's actually upwards of 30%, even between 30 to 35%. So it has a lot of cultural,
That's a very important trend.
yes, there's a lot of cultural context to this. So you just sort this and highlight below this, you actually see some of the cultural biases that there are in these states. So I think that would be a good starting point for us, like national studios, to focus on this. I think Goa there's a lot more independence in what my sense is. I was talking to our own, the regional head of Indian Mutual Fund. So he was mentioning that in Northeast, women are actually the bread earners and probably they're doing better than the men for various reasons, and hence this probably makes sense. The data makes sense why you actually see higher investment share of men in Northeast. So I think they're very in India it's like 28 states and it's actually 28 different places to actually go about it.
In fact, Northeast is a combination of states, 7 states. So if you break Northeast up with Manipur, Rajasthan, and Assam, then some of the states this average is very high.
Yes.
So that's a very important starting point. And what can be an executable strategy, if you really want to work on this.
Yes.
Thank you.
So we have one last question from.
Yeah, hello. Thank you for this beautiful session. My name is Surya Gandhi, and I just want to share my journey of becoming a financially literate. So, me and my friends are from millennial banks, and our teacher, Mr. Dhanuka, has this special class for women only, where we learn about this financial
gardens, and everything about becoming financial aware of all these things. So today, because of him only, I'm being able to follow all the technical financial terms and techniques, and now I have become an active investor. So I make my investments through all the materials which is available in the market, whether it is newspaper which I call my kind of queen. So thank you all. Thank
So
you.
I know what this relative have actually, and I should say and appreciate this body or this organization has been really very instrumental because I know Mr. Bharata is also chartered accountant. So I know a lot of friends are there in this and they have actually this their knowledge has been gone to the next level. So they are like we were talking about such kind of programs, all the workshops, all the seminars. So these kind of organizations are actually walk the talk kind of thing they are doing because I know about this very well.
Thank you so much, Vinda. It was really inspiring hearing you ladies. And that's what I would just like to add what my friend said. Actually, Middle Maths is an NGO. And Sir Bhavna sir and Sanjay Bhavna sir, they're two teachers and they literally work on us, ladies. And it's nearly, I think, 10,000 ladies, more than 13,000. And it's all spread globally. 11 countries, very appreciated. That's a great contribution to the society. And ma'am, sitting here in the first table, sorry, I think maybe I think you have your group of people to go to. I think you can probably engage with them.
So those who are interested can join us.
I want to take the lead. So good to see that. Thank you.
Thank you.
I was happy to take so many questions. A lot of people in the room were also met in the room. So thanks a lot. Thank you, panelists. And thank you, Sangeeta, for having this interesting session today. With all women on the dais.
Thank you so much. I will always speak less for such sessions and speakers have a lot to discuss and share. Nevertheless, before we end this formally, I would like to invite a session chair, Ms. Neha Bhagat, to felicite our speakers on the dais. To Ms. Priti, our restaurant manager at VJ MSL Limited. To Ms. Arunati Shah, the General Organization Manager. To save this windcraft case work, with the nominal station manager. May I now request Mr. Judy Roger, sir, Mentor for Insurance National Commission of Usage to Legislate Ms. Niyama. Usage of the Organization, Mentor.